Nothing in this program should be considered investment advice. It is for educational purposes only. Please hit pause and read this disclaimer in full.
You keep seeing these charts of China treasuries are continuing to reduce. And I've been looking at Chinese inventories. I've not looked at it in the past week, but they've not hit their strategic reserves where we're drawing ours down. So if I'm them, this is a brilliant opportunity to protect my stockpile, sell these treasuries, buy these oil that appears to be artificially lower in price and pull them over here to let your, what is it, Sun Tzu? I don't know all of the sayings, but don't interrupt your enemy when they're doing something foolish.
Welcome, everyone, to this episode of Finance U. I am your host, Chris Martinson, back here again with Paul Kiker of Kiker Wealth Management. Paul, good to see you back this week.
Good to see you again as well, Chris.
Paul, you know what I want to talk about? Oil and gas prices. They're insane. Absolutely insane. So here's a little context. So just a couple days ago, on Monday, because we're recording this on Wednesday, May 20th. So WTI crude, which is just seems to go down, it fights its way back up. But then all of a sudden, Trump comes out and releases this tweet that says, oh, I've decided to hold off on the attacks that were planned for tomorrow, which was Tuesday. And I talked with the leaders of 3 countries, and I'm respecting their wishes. And he named them, right? Mohammed bin Salman from Saudi Arabia, and a couple others. Blah, 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 blah. Turned out none of it was true, right? All the 3 of those leaders came out to the Wall Street Journal and said, we don't know what he's talking about. We didn't even, there was an attack planned. We were consulted. So, but this has been a familiar pattern. Trump tweets something, and it turns out not to be true, or it's denied. Iran's denying it. In this case, Gulf leaders are denying it. So today, May 20th, here we go again. Trump tweets out, says U.S. is in final stages of talks with Iran. So the 10-year yield falls 10 basis points. Yay! Oil gets absolutely smashed, again, below $100 here in the U.S. Now, I've been on this, Paul, because supply and demand are a thing, and price is the settling mechanism between those 2 points. So guess what? When you hold prices down, when you tweet smash prices of oil down, you know what happens? You sell more of it. Surprise, right? U.S. oil exports, second biggest on record this last week. The biggest on record was the week prior. So we're exporting this oil. This is oil we don't have. All this oil above this line of about 4 million barrels a day. Everything above this is coming out of our inventories, our strategic petroleum reserve and commercial inventories. Look at this. Most recent record. This is biggest weekly drain on record for the strategic petroleum reserve. We're selling it to the world. Selling it to the world. And now here's where we're just through the looking glass. Orwell spinning in his grave. This is truly insane. Let's try and make sense of this headline together. Oil prices extend decline after the largest crude inventory drawdown in history. And Cushing, Oklahoma's tank bottoms loom. We're only about 5 million barrels away from just being out at Cushing at this point, which is our largest commercial repository. Oil prices extend decline after the largest crude inventory drawdown in history?
So much for supply and demand.
Have I ever encountered headlines like this? So something is completely fake about this. Something is so fake about this. And by the way, you'll be surprised to learn somebody put a huge bet on oil prices going down just the day before. Huge bets.
Hey, let's get around. Hey guys, I'm going to tweet tomorrow, so get your trades in. Hey, in that headline, somebody at Zero Hedge has been following the Babylon Bee. Because that's a headline that I would see on the Babylon Bee. And for those of you that aren't familiar, it's all sarcasm. It is absolutely hilarious and shockingly true sometimes. So that's so much for supply and demand, right?
It just doesn't, I mean, so here's the prediction. You know what we're going to do is we're going to continue to hold prices down because that's politically what needs to happen. Fine. But then what's going to eventually someday, we run out or we get too low and we get scared. And all of a sudden, that's when they just slam the lid on the whole thing. Oil prices shoot to the roof. Or if they don't, we run into actual supply issues. So couple of anecdotes here. One, I had a gentleman drive out from Boston. We worked in the garden together, a peak follower. Great guy, good time. Thanks for coming out, Chris. But he said, when I was in Springfield, they had one of those roadside signs lit up that said, no diesel for 60 miles.
Ooh.
So the next two service areas on Route 90, just out.
And that's going to further, as they keep moving that sign back, it's going to continue to get consumed more and more. 60 miles.
How do you not have 60 miles of diesel on? This is Route 90, right? This is an interstate highway system.
Yeah,
crazy, right?
This is not South Dakota where it's 120 miles to the next gas station. You've got all kinds of gas stations along the way. Wow.
Yeah. Isn't that, I mean, and like it's just a road sign. Nobody's making anything about it, right? And then the International Energy Agency chief, comes out and he's warning about commercial oil inventories depleting rapidly, only weeks left. This is the kind of headline that we weren't even close to this level in 2022, and oil effortlessly went up to 120 a barrel, bounced there for several months, and then finally I realized, it wasn't that big of a deal. It was sort of resolved what's happening with the whole Russia situation. This is an order of magnitude worse than that, and somehow oil gets smashed because Trump tweets something. Almost every day this is happening now. So a lot of oil traders have decided that there's something afoot in these markets. They're not free. They're not fair. There's an invisible hand. But it's insane, Paul, because whether you agree with politically it makes sense to do this or geopolitically, the point is that when you hold the price down too low, you get too much demand relative to supply. And dwindling oil inventories tell us that we have too much demand relative to supply. There's two ways to deal with this. One, go full communist and just, limit people how much they can buy. Hey, Paul, good news. Diesel's only $5 a gallon. Bad news, you're only allowed to buy it once a month on a Tuesday after 4 o'clock, if there's any, right?
Welcome to your forced 15-minute city, right? You can't travel outside of 15 minutes. So.
Exactly. Way number 2, which is the time-honored way, is you let price be the settling mechanism, and the price rises until enough demand is destroyed that, it meets supply. And that's honestly the right way to do it, because, there are flights that aren't necessary for people to take. There are shipments of super low value goods that don't necessarily have to happen for our society to function, And those are the things that get trimmed off first, right? We're not doing that. We're going to continue to allow supply to be exceeded by demand until we run into trouble. That's really going to be painful.
It's going to be painful. Chris, do you know where all of these exports are going? Is a lot of it ending up in Asia and China? Is that where a lot of these are going? Do you have any data on that?
We do. So last week, 7 million barrels total got contracted for, shipped out, and that went all to Asia. Okay. And prior to that, we had a load that went to Pakistan. A bunch is going to Europe. So right now, our refineries are busy. You can tune your output a little bit. Like you can't just say, I want this barrel of oil to become 100% diesel or jet fuel. But you could take the percentages and get a slightly higher cut of something. And so they've tuned it to get a much higher cut of jet fuel because they need that very badly in Europe. So, but because of that, you get a little bit less gasoline and diesel, which are on the other side of that cut. So you get a little more of this, but a little less of that. So right now, the gasoline inventories in the United States have never been lower at this time of the year. And what do we have coming up? Memorial Day. We're kicking off the summer driving season. This is typically when gasoline demand peaks to its highest for June, July, August, right? Maybe even more so now that people like me no longer like flying. I hate it, and I'm not going to Europe. So, I think more people are going to be taking driving vacations than, flying vacations. So we could run into real gas problems. And of course, we know it's a serious problem because Chris Wright, the energy secretary, came out yesterday and said, we're not going to run out of gasoline, which made a lot of people worry we're about to run out of gasoline. You know?
Very good reaction to that statement. But I keep thinking you keep seeing these charts of China treasuries are continuing to reduce. And I've been looking at Chinese inventories. I've not looked at it in the past week, but they've not hit their strategic reserves where we're drawing ours down. So if I'm them, this is a brilliant opportunity to protect my stockpile, sell these treasuries, buy these oil that appears to be artificially lower in price and pull them over here to let your, what is it, Sun Tzu? I don't know all of the sayings, but don't interrupt your enemy when they're doing something foolish. That's the summary kind of what it is. Chris will remember, y'all. Can you remember exactly what it is, Chris? I'm going to be surprised if you don't.
Never interrupt an enemy who's in the process of making a mistake.
Bingo. Somebody was teasing me the other day. I need to put quotes everywhere. I said, why do I need to do that? Chris always remembers. I just need to get close. So, but if I'm them, I'm going to strip away, let us make a mistake and getting our inventories low. And then when I absolutely have to, I've maximized the liquidation of my treasuries. But maybe part of that's why it's going up. I don't have to recycle back in, let rates go up because they've recycled them back into our treasuries. And then you can facilitate an economic calamity within the United States. And if it's bad enough, now I've got all these reserves over here that I'll start using to protect our citizenry. Like, it's just brilliant on their part. They're thinking assuming that's what they're doing. They're thinking long term, but we're incentivizing that, right? I mean, you see the statistics on the silver that's gone over to China and to India and the other places. And what was it, a year ago we talked about maybe? Where the Indian banking system had allowed extra leverage on silver backing, which was like 10-1 within certain parameters in relation to gold. And I think we talked about at the time, what that's doing is incentivizing stripping those metals out of the West over to the East. And what our actions are doing is incentivizing stripping our reserves and our emergency fund as a nation over there while they're preserving theirs.
Top 3 exports, top last 3 months, top exports, gold. It's our top export. And we're exporting a lot of oil, but we're exporting more gold. Where is it going? China. Guaranteed. Guaranteed.
And
but
unobtainium to come back.
Oh, yeah, no, that's a one-way trip for sure. So on the one hand, we got Trump tweeting, which just somehow magically corresponds with all these oil slams. I have my suspicions about how the mechanism behind that. But on the other hand, right, we have the IEA chief, Fatih Birol, who I put up here, right? You've got Jeff Curry, the legendary commodities investor out of the Carlyle Group, saying the same thing. Like, this is kind of, he's out there saying flat out, we could hit tank bottoms by July 4th. Tank bottoms. That means you've hit operational insufficiency and the refineries just shut down. And now you're in a true crisis that's almost unimaginable to anybody listening, including me. And you've got, Daniel Yergin, the oil guru, was just on CNBC yesterday saying, this looks really bad. So you have all these experts, CEOs of oil companies, top commodity analysts, every major commodities analyst house, all saying the same thing. This is bad. It's heading to worse. And if it gets to worse, this is a real existential moment. Like, this could be really bad. Mm-hmm. And somehow, all that happens in our markets day after day are these slams, just slam. Look at that. 4.75% at the time I took the snapshot at 11, whatever this morning. It's relentless. Sell oil. And we are selling oil. It's going to the rest of the world. And we're eating our seed corn. This is like, Paul, a trust fund kid comes up to you and says, good news, my parents left me a tasty trust fund. I'm going to live off it forever. And you take a peek and you find out they've been eating into the principal balance every month on a heavy basis. And you're like, I have some bad news, kid. Yeah,
you're in trouble. You're in trouble. Yeah, you don't need to be buying all these depreciating assets just to make yourself look good in front of people that you don't necessarily like, right?
Markets are facing heightened uncertainty, and thoughtful portfolio management has never been more important. If your current strategy relies solely on passive investing or diversification without active oversight, it may be time to consider a different approach. At Peak Financial Investing, we connect you with experienced wealth managers who actively manage portfolios using disciplined, research-driven strategies designed to adapt to evolving market conditions. Our focus is on helping clients navigate volatility with clarity and confidence. While no investment strategy can guarantee results or eliminate risk, we believe that preparation and active management can make a meaningful difference over time. Visit peakfinancialinvesting.com to schedule a complimentary consultation and explore whether our approach aligns with your goals. I'm Dr. Chris Martinson, and I am proud to support Peak Financial Investing. This is not a guarantee of future performance, but a call to take your financial planning seriously. Again, that's peakfinancialinvesting.com. Investing, of course, involves risk, including the potential loss of principal. Past performance is not indicative of future results. Please consult with a qualified advisor before making investment decisions. While you were gone last week, I also put out this big piece. It was kicked off by watching this astonishing interview between Tucker Carlson and Kevin O'Leary, the Shark Tank guy, wearing a baseball hat, in a suit. In his usual inimical self, talking about this massive data center that they're going to be building in Utah, right? 9 gigawatts. It's going to potentially raise nighttime temperatures by like 26 degrees Fahrenheit because of all the waste heat from, I call them giant toasters, right? They're toasters that don't make toast. That's what a data center is. We feed all this energy in and it makes waste heat, and that has to go somewhere because that's a law of nature. And so it basically gets dumped into the environment. And so there could be that, but it was the power. Where's all this power going to come from? He's like, we're going to use, there's this natural gas pipeline, the Ruby pipeline. It's only 17% utilized. We'll just use that. In a typical sort of Wall Street, Silicon Valley, like shrug, the minions will figure that out. I've decided that we need this power. It'll come from somewhere. They like no grounding in reality. So I added the numbers up and like, where's all this? Is anybody mathing the math on natural gas? And so this just came out on Jack Prendelli's X status this morning. U.S. gas demand growth by sector. These are 5-year increments in here. 2007 to 13, 13 to 19, 19 to 25, and now we're looking at 2025 to 2031. This is going to be the forecast. Obviously, we haven't made a 2031 yet, but this is going to be the highest growth in gas demand in any 5-year period in history, and it's going to be 27 billion cubic feet per day. Almost the biggest chunk in red, LNG feed gas for making liquefied natural gas. Power is just going to be sucking up another 5-6 BCF. You've got this industrial here in blue, green. Mexico exports. They're going to need a little more. Canada exports. Kind of weird. Canada's usually a net positive. But at any rate, massive. Where's all that going to come from? Where's all that, the largest projected? You know where it's going to come from, Paul? I can tell you exactly where it's going to come from. It is going to come from the customers out there who have the least viable contracted arrangements are going to find themselves in curtailment in moments of need. Now, I picked up some of that language from this amazing comment that somebody just put on Twitter. Immediate follow for this guy. It's like, doom. He talked exactly. He said, here's what happens. It's a very complicated market. There are all these different contracts that are out there, right? So different people have different contracts. And the people who have the least contractual teeth or claim get cut off first. It's almost always residential. Those people are at the weakest end of this thing.
Yeah.
So
they had
curtailment just means viciously higher prices, right? For residential.
Or no access at all. What was it? I read a report or saw an X post that apparently there was some Nevada company that was supplying power over the state line into California, which is going to be potentially redirected or no contract because of the data center that's potentially coming up. So it's like, forget you people. We're going after the biggest pockets and we're going to go to them because then we can deal with one customer instead of 20. Like it's the Walmart model that just absolutely destroyed mom and pop businesses and small communities across the nation, but in our energy capabilities. I mean, horrible.
It just looks to me like we're a little short on people at that sort of Kevin O'Leary level, a little short on people there who've actually swung a hammer, dug a ditch, like played with gravity or been out in reality. This is just the energy reality. The amount of energy ignorance out there is astonishing to me, including to the president, who just a couple weeks ago we talked about this. He's like, we're going to double our oil output next year. I'm like, What? No, we're not. That's not. Nope, not happening. Right. So just astonishing that you can have that energy ignorance at all levels. It's profound. It's gonna. Now, again, there's opportunity. I want people to be aware, like your utility costs are going up. Sorry, they just are. Right. Electricity's already been going up for a lot of reasons, data center costs being one, but other reasons. Like we forgot to invest in our electrical grid for a couple decades. Oops. But on the other side of that, it's pretty clear to me what the investment thesis is around this, which means the energy sector, particularly in the United States, I think is going to be doing particularly well for a good long time going forward. And that's just the math of it. Barring something crazy, like they nationalize our oil and gas industry or forbid exports and force companies to sell at some prevailing rate the government has set, not what the market would set. Those could be disasters. But that's how you wreck a country and you wreck an industry and you wreck the bottom layer of prosperity. And if we do that, what do you think about Costa Rica?
No, I love Costa Rica, by the way. I do. I wish my wife liked it as much as I do, but I love Costa Rica. But yeah, I mean, that's dancing around the edges, but essentially it's full-on communism is what it is, and controlling no free markets and mass misery for all.
Yeah. Yep. So that's the energy story. Obviously, we'll keep tracking that as time goes on, but what a story developing there. It's amazing.
Yeah, it really is. And that's like one of the reasons why we had developed it took a little longer than I wanted to, but building an energy stock strategy to participate in an obvious long-term trend that's adaptable enough to shift as that, rolls through the system till we catch back up. And, it's one of those things where you just have to look at it and say, look, we need some exposure to this from a long-term standpoint. Carry a little bit more risk. A small percentage of your portfolio can make a dramatic outcome, make a huge impact on your inflation protection from that standpoint, assuming that the weight of the evidence seems to be clear. Probably going to take longer than we think, or maybe quicker. Who knows how it is, but the weight of the evidence is there. And you just have to have exposure to it. You look at the cap weighting of the S&P 500. I mean, energy and anything from that standpoint is just minimal percentage of the S&P allocation. And I think we're going to see a massive regime shift going forward unless there's just absolute communistic type control within there. And but there's going to be plenty of gains there before that heavy hand steps in. So I still see huge opportunity in that space.
Good. All right. Well, with that, Paul, we are done for today. So if anybody out there listening wants to talk to Paul or his amazing team, please go to peakfinancialinvesting.com, fill out a simple form, a few questions in there, and some disclosures, and click send or submit. And then somebody from Paul's office will be in touch with you within 48 business hours to schedule what will be the first of 3 calls. You get an introductory call, then a planning call, and then finally, if you get there, a recommendations call. And if all of that sort of sorts itself out and it makes sense to work together, then you could go down that part of the road with Paul. Everybody who's gone down that process, though, independent of whether or not they end up working with Paul and his team, says it's been a highly valuable process. So I would encourage you to take advantage of that today while you can.
No obligation. I hope you guys can tell we're not high pressure. If we can help you and all that is the plan, then everything else will take care of itself.
Well, thank you for doing that, Paul, and thanks for your time again today.
You're welcome. Good to see you, Chris.
All right, bye, everybody. We'll be back next week with another episode of Finance U.